Hello, good evening, ladies and gentlemen. Hello, traders and investors. This is Alex from MarketWise Asia. And if you could hear me loud and clear, please say a hi to me in the comments or in the chat box from YouTube. So as usual, today it is the 10th of March 10. Okay, so as usual, it's a Friday. So good to see every one of you here once again. Okay. All right, so the market has been pretty exciting for the past 1 week, right? So last week I didn't do my Facebook Live because I have some family gathering. So this week, okay, well, before this Friday comes, okay, the market has been tanking. How is everyone feeling right now? Anyway, by the way, so actually I am doing this Facebook Live a bit rush because actually for the past 2 days I have mild food poisoning. So I actually vomited like 2 times, okay, and the stomach is not feeling very good and such. So I'm not very active on social media, especially for those who have been following me on Twitter, okay. But now, yes, I'm getting better right now. So yeah, here I am, sitting down, sharing with you my thoughts on this Facebook Live, okay. And then actually just now, I also went to bring my daughter to see a doctor, a PD doctor lah. So I just came back home not too long ago, was rushing here and there to settle down my daughter. So you can see that my hair is wet because I just bathed only. Okay. So yeah, so I think I actually also didn't prepare a lot of stuff, but there are certain things that in mind that I want to share with you. So I just go with the flow. Okay. If everything is okay, just go with the flow. Just share what I want to share today. Okay. Everything okay, just type okay in the comments. Just type okay in the comments. So I just go with the flow. Just share whatever I can with you today. Can so yeah, all right. So in case you think, hey, how come Alex I'm not very coherent today or like nothing much to share? I have lah, just like maybe not so structured in a way. Okay. Can so let me take a look at the comments right now. So hello Wei Lun, hello Dave, Yolang, Pauline, Tracy, Christopher, Valerie, Stephen, Amanda, CJ, Hadley, CA, Chuming, Roland, Peiwen, okay, LW. So as usual, some of these are very familiar names, okay. Thank you so much for being with me and with me and here today on time today, okay. Mark, William, okay, Kok Leong. All right, so thank you. So okay, let's kickstart this session for today. So don't want to waste a lot of time today. But I think, yeah, so before I get started, right, again, for those who just joined me, please give me a like, share, or comments if you find any value from this Facebook Live or YouTube stream. It will help your friends a lot also. So let me share with you my screen right now, okay? Share screen. Normally I preset, but today haven't ever preset all the things yet. Okay, so you can see my screen right now, right? Okay, fantastic. So disclaimer first, whatever I share today is just for education and information purpose. It is not a recommendation to tell you what to buy or what to sell. Okay, so Alex could be wrong, so please do your own due diligence. All right, so let's get started. So before I kickstart this session today, a few of my social media channel that you should join and subscribe. So number one is Telegram channel. Okay, number two is YouTube channel, and number three is Twitter. Okay, so as I mentioned, Twitter, a lot of these some of the ad hoc price mover breaking news I will share with them on Telegram. Of some of my trade ideas I do share with them on Telegram channel as well. YouTube, if I can't do my Facebook Live, I will tend to share on YouTube as well. So do subscribe to these various channel. Twitter, most of the time I will share my trade ideas as such. Okay, so do subscribe and join. I'll post the link in the comments and also in the chat box over here. And of course, okay, the Asia Trading Festival, it is coming up, not exactly very soon, but soon, okay, soon. It is actually happening on the April, okay, 29th and 30th. So we have another sponsor, okay, by 8cap. They sponsor us before. So Asia Trading Festival. So we haven't actually finalized the speakers. There'll be new speakers as well, and there'll be resident speakers as well. So for example, like Jay Tut, always there for us, okay. So there'll be new speakers, new keynote speakers, and also the resident speakers as well. So do pre-register your interest right now. Okay, as usual, right, those who pre-register now will get some exclusive bonus and materials just for you guys who pre-register, and you'll get it earlier than the rest of the registrant. So, okay, once again, this Asia Trading Festival, do pre-register. Now, I know some of you have already pre-registered, but, if you pre-register, there's nothing for you to do. But if you're unsure, you can just, re-register again. So, you'll see a thank you note and that's it. So, you will not get a confirmation email yet. So once I prepare the materials, then I'll send to you guys. Okay, Ken, not so soon, okay, but pre-register yet. All right, Ken. So I think there are people who are still streaming in. The time is still a little bit early, 11:38 or so. So just give me a like, share, or comment, Ken. Okay. So of course, for those who are aware of the what's happening for the past week, right? There's some Jerome Powell is speaking. Actually, Jerome Powell spoke. Okay, Jerome Powell spoke, and then there's today and yesterday there's some of the economic data, etc. All right. So of course, I think 2 days ago, the Federal Reserve Jerome Powell, said that sets the table for higher and possibly faster rate hike, which is here. Okay, which means that he said that inflation is still here. They want to control it better and such. Okay, so which means that it is still hawkish. Hawkish meaning that they are still in favoring of a higher interest rate. Dovish means they kind of want them to lower the interest rate. Okay, so for those who don't know what's between hawkish and dovish, so also his comments are still hawkish. All right, so previously there's a possibility that it will hike to 50 basis points. Now the probability is even higher right now. So that there's a probability that it will hike 50 basis points in the next March upcoming rate hike. Okay, so this is the link which I shared before previously. Okay, I will just share it once again. This is the CME rate watch tool. Okay, I'll post the link in the comments over here. Okay, so this is the one. So left 12 days to go. And by the way, next week is the CPI data. Okay, next week is the CPI data. So next week CPI data 14. Okay, 14. All right. So 14, it is on a Tuesday. So it's coming up. So next week is gonna be a volatile week again. Okay, CPI data 14 of March over here. All right, and then this Fed Watch 2 in 12-day time. Okay, another 1.5 week to go. All right, so this is the 22nd of March. 22nd of March is actually on the Wednesday. All right, so right now there's a 50-50% chance. Okay, 50-50. All right, 50-50 that you will hike between a 50 basis point, which is here, 50 basis point, or a 25 basis point. Okay, so what do you all think? Do you guys think it's going to be a 25 or a 50 basis point? You can type in your comments below. Okay, all right. So personally, I think it could be just 25 lah. Okay, it could be just 25 basis point. It's just my personal view. Okay, all right. It's just a guessing game. Okay, I don't know. I don't know the answer. All right. So of course, what's the implication? What's the implication if they do a 25 or 50? Okay, so based on seasonals, okay, generally towards the mid of March, okay, mid to late of March, then the market will tend to go higher based on historical data. Okay, from February is one of the worst month in the whole year based on season data. From the start to the mid of March, also not so good. So maybe my guess is that by the time they announced on the 22nd of March, okay, they announced the 25 basis points and the market rally. That could be a possible thing. Okay, of course, 50 points. I think right now maybe also not much reaction because I believe that right now the market already priced in already a 50-point basis. The reason why you can see that the market right now is like, for example, the S&P 500. Okay, it is actually tanking. Okay, so it has been down. Maybe it could already price in. So we shall see. Okay, I don't know the answer, but let me see. So actually it's quite mixed. Some say 25, some say 50. So yeah, okay, we shall see. But anyway, this is to let you know that right now it's 50-50. Okay, and of course, let me just go through the main crux of this session today. So there are a few things that I want to go through. But first of all, so from right now it's still the start of March, the 10th, actually 1/3 of March is still gone. But let's make a poll over here until the end of the month, okay, March, end of the month. Do you think the market is going to go down lower or the market is going to go down higher? If you think it's going to go down higher, okay, you can just type H in the comments. Go up higher. If you think it's going to go down lower, by the end of March, you can type lower. Okay, comparing to the price right now today. Of course, if you think it's going to high at the end of the month, it's going to go higher, just type H If it's going to go down lower, just type L in the comments, H or L, based on your consensus right now. Okay, let me take a sip of water. Haven't had a good break. So was rushing to settle down. So let me see. So higher. So again, it is pretty mixed over here. Okay. All right. So by the way, for those who know that, who has been watching me, okay, I am not a permanent bull or permanent bear out there. So right now, the market, okay, the recent price action indeed doesn't look very good to me right now. So previously I was mentioning that, hey, price stay above the 200 days moving average, until price can break below 200 days moving average. Then I said, I'll be more bearish, that kind of thing. So right now, indeed, the price is actually not so bullish. So for those who are mistaken that, hey, Alex is always a bull, I'm not always a bull. But again, okay, I will show you the pro and cons. Okay, there are some cases for a bull case, and there are some, market breadth thing to show you a bear case or whatever it is. So I will showcase both of these two sides. Then I'll give you my view, how I think of the market, what I'm going to do for the next 1 to 2 weeks or so. All right. So don't ask me how the market is going to fare 3 months, 6 months down the road. I do not know. But based on a trading perspective, a swing trade perspective, I can tell you what I'm going to do. Okay. But it might not happen. Okay. There's always no certainty, but just probability. Okay, can you just type P in the comments? Only just probability in the comments. Okay. All right. So of course, this is the oh, by the way, the non-farm payroll, I forgot to tell you, the non-farm payroll, the economic data just came out not too long ago. So you can go to Forex Factory. All right. So Forex Factory over here. Forex Factory just now, the non-farm payroll, also the employment change, non-farm employment change, you see, in fact, it's actually up. I think you guys cannot see, right? I'll just zoom in. So it's up, from the forecast 224 to 311K. Okay, so in fact, the non-farm payroll increases, so there are more jobs being provided and such, but the unemployment rate actually increased a little bit more. So previously it's 3.4, the forecast is going to be flat, no change, but right now increased a little bit more, 3.6. And before the market opened, right, that actually caused the futures market to actually surge higher. But right now, market just open higher and close down lower. Okay, so based on this, I'll go through certain things over here. Right? So this is the main index, the equal weight, and we'll look through the bonds and the market breadth, the market internals, the VIX ratio. And I'm going to go through with you some of the big hoo-ha, the saga that happens just this week or last week on the Silvergate, the banks and the regional banks. Basically, the hoo-ha, the Silvergate and the SVB, the Silicon Valley Bank. All right, so I'll go through with them one by one over here. Okay, so let's go through the indices right now. So the indices, the main one, of course, the S&P 500, the NASDAQ. Okay, all right, and then the Dow, okay, and the NASDAQ. Okay, so the S&P, let's go through the S&P 500 first. Okay, all right, so this is the S&P 500. So previously I mentioned that price was above the 200 days moving average. So I'm going to stay bullish. Okay, so right now, okay, not right now. See, in fact, this is the S&P 500 futures. So in fact, when price broken above the 200 days MA, so this is the red line is actually the 200-day, simple moving average. Okay, so it was bullish. So come back over here, rebounded, and then came back down again. Okay, all right. So right now, price seems like staying below the 200 days moving average. All right. So this is one case for concern. All right. And then the Nasdaq. Okay, it is the strongest. I think it's the strongest. Is it? Yeah, the strongest among the three. So it is still hovering above the 200 days average, but just barely. The Dow has also broken below the 200 days moving average as of now. So the Dow is trying to stay above that. You can see that there's a long wicked, long shadow over here trying to stay above the 200 days moving average. So judging from this, you might turn bearish from this price starting to go down lower and such. Okay, but okay, if you look through the equal weight indices, okay, the RSP, which is the S&P 500 equal weight index, and also the Nasdaq equal weight, that is a different story for now. So you can see that the RSP, okay, all right, yeah, okay, equal weight. So today, actually, in fact, yesterday still stay above, but today broken below the 200 days. Okay, so today is bearish. Okay, so price today, not sure whether it can stay above the 200 days moving average or not. Okay, all right, and then the QQQ, right, still staying above the 200 days moving average. All right, for the mid cap, okay, mid cap still struggling, right, staying above the 200 days moving average, and then the small cap IJR just broken below the 200 days moving average. So all in all, previously I think yesterday or today I was looking at the RSP, so it was still staying above the 200 days moving average. But today, of course, the market dived down again, and today it dropped. So all in all, the market, it is actually not looking so positive right now, not so positive. And I can tell you that I got stop out. So I got stop out 2 position. Okay, not a lot, 2 position only, because I was pretty light during the month of February and also the early March lah. Because seasonal data wise, it was not the best. So I'm going light. So yeah, so okay, let me share with you this. So previously, when the market do rally for a few days, at that point in time, I do have exited a few of my position. Okay, and also if you remember, actually, did I mention that did I mention did I mention that okay, I think I mentioned during this video over here, right? So I think last week I said that I am not available for the Facebook Live, going for some family gathering. So during this video, I actually mentioned that S&P 500 actually hit the resistance level pretty soon, the pivot point resistance. So I'm going to share with you this, okay? All right, so I'll just remove the pivot point so it can easier for you guys to see over here. All right, so can you see that? Can you see that over here? So the green dotted line here was the central pivot range. So for those who have been following me, you should know. So for those who are new here, I think maybe some of you are new, but doesn't matter. Okay, just follow me. So generally, when price is below the central pivot range, okay, it is generally bearish. Above is generally bullish. Okay, can you see that here? Price is acting as a support. Okay, after that, at a resistance, acting at a support again, that kind of thing. All right. So as I mentioned last week, YouTube video, I said that I mentioned that after the 2-day rally over here, you guys can see after the 2-day rally over here, we hit a pivot point or the central pivot range resistance level over here. Okay, again, this is a shooting star, a pin bar, whatever you call it. But after then, price really came down. So at that point in time, a few of my position, I actually take profit, but there was a few position I still hold on to it. Okay, thinking that never mind lah. Okay, I think let's just hold on to it, because if you have been following me, I always mention that my risk to reward is 1:1.5. Okay, but it didn't hit 1.5 lah. So at the time point is only 1:0.8, which meaning that if I risk $100, if I take profit $150, I will exit, right? Which means that those that I have in position, I risk $100, I was in profit about $80. You get what I'm trying to say? So at that point in time, I said that maybe I'll just hold on to it lah. 谁知道 I hold on to it, price collapse, and then subsequently, I also cannot stop out lah. So I'll just be totally honest with you. I was also stop out 2 positions, but still okay. So all in all, my January profit was still quite good. Okay, so have still a lot of buffer. So those who, if you are bullish and those who say that they are not stop out, I think they are lying to you lah. Okay, I'm just trying to be honest with you. So yeah, stopping out is normal. Of course, the bear people, okay, the bearish people or the permanent bear had their field day, field FIEL day. So the market collapsed and they are very happy lah. Okay, all right. So all in all, I am not so positive on the market right now. Of course, there are certain things that you might want to look at also. the S&P 500, okay, it is right now below the central pivot range and also below the cloud. So what does that mean? Okay, which means it's a downtrend. The downtrend, as I mentioned, right, to keep things simple, price below the cloud, you deem it as a downtrend. Price above the cloud, you deem it as an uptrend. Can you understand what I'm trying to say? Simple, right? I think the chat and comments is getting pretty quiet. All right. So just understand, type letter U if you understand what I'm trying to say. Okay. All right. And then the Nasdaq still hovering above the cloud, and of course the small cap Russell 2000, it is below the CPR and also below the cloud as well. So yeah, so there's a case for concern right now. But I want to give you some perspective. So the S&P 500, even though right now is below the cloud, okay, but if you look at a 2-day time frame, okay, actually it is still holding on above the cloud. Okay. All right. So again, you might say, hey, Alex, how do I know when to use 2-day? How do you know when to use the daily time frame? How do I know when to use the weekly time frame, etc.? All right. So, okay. So, right, for the, I'll go through that. So the Russell 2000, it is still kind of trying to last gaps of breath over here to try to hold support above the cloud over here. Okay. All right. So again, okay, I'm going to use example over here. I'm going to use this Turkey ETF as an example to show you how things pan out using the 1-day and 2-day. It could happen, but all right, to give you a different perspective. All right. So if you look at the Turkey ETF, so Turkey ETF last year, I think was the best performing country ETF, if I'm not mistaken. Okay, it was the best performing one last year. Okay, last year. Okay, you can see that since 2002 all the way up, boom, like that, right? Can you guys hear? Okay, all right. So can you see that for the Turkey ETF, right? Price has always supported above the CPR, central pivot range, central pivot range, central pivot range over here, central pivot range. All right. When price starting to break below the CPR, then that's things start to get a little bit more tricky. Okay, can you see that price break below the CPR, retest again and come back down again. At a point in time, if you go at Turkey, right, you must be wondering, hey, Alex, price is below the central pivot range and also below the cloud. So if you remember what I always say, below the CPR, below the cloud is in a downtrend, right? But okay, if you look at a higher time frame, can be a 2-day or a weekly time frame, right? It can give you another perspective. Okay, all right, can you see the 2-day time frame? All right, so 2-day time frame, it is basically just a very steep correction, over here. Okay, just a very steep correction. So basically, it just have a very huge rally, okay, a very huge impulse move and then a corrective move. But do you realize that after that, price hit somewhere around the cloud and then rebounded back again? Okay, this is something that could happen. But okay, I'm not saying that this could happen to the US indices, but this is something that it could happen. But just to give you a perspective, what is working on or what is showing you on the higher time frame chart. So on a weekly time frame, all right, can you see that this is actually just a very normal pullback. This is just a very normal pullback and come back down and then go back up again. Of course, whether it can go higher, it remains to be seen. We won't know. But what I'm going to show you is that the daily, although it seems that it is like crashing, it is downtrend is over, okay. But if you go to the 2-day, all right, it is actually a very normal pullback over here. So if you look at let's say for example, a Fibonacci extension or a retracement, right, you can see the high swing low over here. Okay. In fact, if you look at the daily time frame, the Fibonacci. Okay. All right. So this is just a normal pullback over here. Okay? In fact, it just retraces between 38% to 50%. So it's still pretty normal to me. All right. So let me see. SG Bar Wonder. All listening in fear. No need to worry. I mean, okay, I mean that if you are doing swing trading, if you have lesser position, then at least for me, I think it's still okay. But if you have a lot of position, then, you know, it can get a little bit worried. You should get a lot of stop out already if you have a lot of swing position, okay? Anyway, right? So listen to both sides of the story, okay? Andy Bo is asking, can you show how to get the cloud and central pivot range to display on the chart? Okay, so Andy, so let me show you. I think you might be new to me. Okay, so this is the so this is the YouTube tutorial over here. The cloud and the central pivot range. I'll show you how to put it on trading view. Okay, all right, Ken. So do you understand what I'm talking about on this Turkey ETF or not? If you understand what I'm trying to say, right, just type clear over here. Just type clear over here. All right. Can you understand on this Turkey ETF based on the different time frame? Can you understand? If you understand, type clear. If you don't understand, I'll try to repeat one more time to show you the difference between daily, 2-day, and weekly. Because I was looking at the various ETF, okay, I really see that this is the best example I can show you on to showcase the different time frame, how it works on the cloud and the CPR as well. See, I can see that a lot of things, a lot of you are clear. So basically, okay, on daily time frame, it looks very bad. But on 2-day, it is just a normal retracement. You can see, so this is basically what I'm trying to tell you, is still above the cloud. So again, what I'm trying to tell you is that, you know, right now, S&P 500, okay, even though on the daily time frame, it looks very scary, okay? It could come down in the coming weeks, I don't know. But right now, based on daily, it could be a bit scary. But based on a 2-day, it is still hovering right above the cloud over here. Okay, it's still hovering right above the cloud over here. Okay, based on the NASDAQ, it is still hovering at the cloud support over here. Russell 2000, based on 2-day time frame, 2-day again, it is still hovering at the cloud support over here. RSP for 2-day time frame, okay, it is still hovering above the cloud, okay. NASDAQ equal weight, it is still holding above the cloud over here, okay. Mid cap, it is still hovering above the cloud based on 2-day time frame. All right. So IJR, it is still hovering above, not hovering above the cloud. It is touching the cloud right now. So all in all, I can say that if you think that the market is going to hold, it's going to stay bullish, right? This is just a very steep correction. It is just a very steep correction. Okay, it's just a very steep correction. Okay, which means that, you know, and if you look at the naked chart over here, all right, S&P 500, okay, can you see that it is still actually forming a higher low? This is the low. This is a higher low. This is a higher low. Okay, all right. So can see, so we still haven't breached that low over yet. Okay, so right now the market is indeed not so bullish, but I'm still, you know, be more optimistic about the market because right now I'm still pretty light on my portfolio, as in terms of swing trading. So I'm not so worried when the times come. Okay, in fact, I'm looking at the market. In fact, I'm looking at the market today, okay, to try some long position. But the night is still young. I'm going to see how it goes first. This is what I'm going to do. I'm looking to try to long some position if the market can recover, okay, by the end of the day. Maybe not until 5 a.m. now. I will see until past 1 to 2 a.m. and I'll see how the market goes. Can you guys see or not? All right. So it is still a higher low. And the NASDAQ, okay, it is still a higher low. Okay, so actually it's still not so scary. Okay, mid cap, even though it plunged the most, all right, okay, it is still a higher, this is a low, this is still a higher low over here, this is still a higher low over here, okay. And the reason why it feels so scary because recently plunged a lot, but you need to realize that, you know, for the past you know, at the start of the year or even late until late October, it went up a lot. So to me, this could be just a very steep correction over here. Okay, let me try to answer some question first. Tarun, you asked a very, very good question. What about 3 days, 4 days? Yes, I do look at 3 days, 4 days time frame also. Okay. Okay. This is something that I don't usually share, but yes, I do look at 3 days, 4 days to give me another perspective on how the market is doing. Okay, for example, let's the S&P 500, right? So let's try to do a 3-day, okay, 3-day time frame over here. This is how the 3-day time frame look like for the S&P 500, just broken above the cloud, okay, and still finding support at the cloud over here. But it is not my main time frame to use. So generally, I'll use the daily, the 2-day, okay, and the weekly. So unless I see that, 2 days still can already give me a perspective or kind of thing, I will see 3-day. 4-day, I don't usually see because 4-day and 1 week almost the same already. 1 week is equal to 5-day. So 4-day and 5-day, I think not much difference. But you can still see, but generally it's just daily, 2-day, and weekly. All right. Okay. A longer time frame means more days to recover compared to definitely yes. Thank you, Yang, for answering this question. Yeah. Take more time to recover. For fantastic answer. Okay. Sajid, how about long-term view? Long-term view, to be honest, I don't have an answer because it can be quite tricky, and my main kind of trading is swing trading, holding for a few days to a few weeks. That's all. So anything more than 3 months, 1 year, I can't tell you the answer. I'll be totally honest. Okay, and of course, along the way, there could be a recession that's coming in. There could be a market crash. I don't know. So let's take 1 day at a time for swing trading. Okay, and SG Bond under also answer also answer a thing that I want to tell you later. So next week, because the daylight saving, right, the trading time will be starting from 9:30 instead of 10:30 onwards. So you guys can sleep a little bit earlier. Okay. All right. So before I go into that, so this is the market view. So it depends on how you see the market. It can be really just a very steep pullback. Okay. Or the market is indeed crashing soon and going to crash lower. So as of now, okay, even though the price action it is not really good, but at least to me, right, it is still holding well below this swing low and this swing low. So I mentioned in my last video, right, price need to break at least this swing low over here. Okay, all right. So about 3009 lah. Okay, 3009. If can break convincingly, I think the next target will be here already lah. Okay, all right. Now it is still holding pretty well. So 3900 3900 somewhere around there. I hope that it can hold, but we won't know. Okay, so we need to prepare for that. So it's still holding on to this swing low over here. Okay, can? So let me go through some of the things over here. By the way, for those who just joined me, we have about 260 people in the room. Just give me a like, share, or comment if you find value in this sharing. If you want to give me angry face, also fine as well. Okay. Let's go through the bonds. Okay, I'm going to go through the market breadth. Okay, market breadth. Okay, I'm going to show you right. Okay, which one to go through first? Okay, maybe I'll go through the banks and the regional banks. Okay, regional banks and banks. So of course, right now, how many of you are aware of this bank saga by the Silvergate and the Silicon Valley Bank? If you understand, if you know this saga, just type yes in the comments. Just type yes in the comments. Okay, of course, these are Silvergate. It is SI. SI actually crashed, I think 98%. Okay, it went down because of the crypto thing. Crypto. All right. Okay. Yes. Bonds issue. Yes. Okay. Bonds issue. So and then also crypto is that they have a lot of withdrawal, and also they also held a lot of treasuries as well because of the XTX. Okay, I think a lot of people withdraw something similar. Okay, it's linked to crypto and also linked to treasuries. Of course, the recently is the SVB, the SIVB, okay, Silicon Valley Group, okay, Silicon Valley Bank, okay, and they crashed today 60% because Peter Thiel, okay, say that it is good to withdraw if you can, that kind of thing. So it caused more fear and it caused a bank run actually. So because you need to understand that banks, right, they do not hold all your cash. If everybody want to withdraw everything at one go, they don't have enough liquidity, enough cash, okay, to give you back. It cause a bank run. All right. So of course, this one is the Silvergate and the Silicon Valley. Okay. So you need to understand that, okay, bank, when they have your cash, they don't hold just cash. All right. So a lot of times bank held treasuries, okay, to back your customers' deposit, okay, because customer deposit, okay, they hold treasuries, right? They can get interest rate higher from the U.S. government bonds and such, so then they make money from all these treasury bonds as well. Because just holding on to the customers' money is going to make them extra money, make them extra income. You understand what I'm trying to say, right? Okay. All right. So even though people do deposit more money into the bank, but they are not lending out fast enough due to the highest interest rate. The reason why the Federal Reserve increased interest rate, right, is to prevent easy money and to prevent all the SME, the multinational companies to borrow cheap money. So they want to stop that. Okay, they want to stop that. They want to curb that kind of cheap money. So the banks are not lending out. So the companies don't want to borrow. Companies don't want to. The banks don't want to lend. So they're not lending out fast enough. But okay, they do not, as in, they do not lend out fast enough, then do not have enough income, right? But deposit cannot cover all these higher interest rate loans, okay? And then the banks have the unrealized loss when the value of these treasury falls. You need to understand that, like for example, bonds and interest rate and the yields are inversely correlated. Okay, when the bonds are down, okay, when the interest rates are up, the bonds are down. They are inversely correlated. So they have the unrealized loss. Okay, all right. And when there are a lot of customers trying to withdraw money, right? Okay, all right. The banks have to what do they have to do? They have to sell the treasuries, right? Okay, convert into cash and give back to the customers. You get what I'm trying to say or not? So they sell the treasuries right now, they will incur losses, okay, because it is not until maturity. If they hold until maturity, 10 years, 30 years, 20 years, they will still get back the yield. But if they do not hold until maturity, they sell right now, they will incur losses because bonds and yields are inversely correlated, and in between the bond price can move, okay, and right now they are selling at a loss right now, okay. So can you understand what I'm trying to talk about this thing? If you understand what I'm talking about this thing, again, just type okay in the comments. Basically, this is the saga lah. So basically, too many people want to withdraw the money, they cannot tahan, okay. Bank run, something similar to bank run. If you understand what I'm trying to say, just type okay in the comments. So it is unlike 2008 or 2009 financial crisis where the bank give out bad loans. So this is not, it is different from the 2008 and 2009 crisis. So part of the reason is because of the bonds and the higher interest rate. Okay, can. And talking about that, okay, that caused the market to sell off for the past few days also, because okay, the US market, it is very connected to the banks. When the bank goes, there goes the index and the market as well. So it's correlated with this saga as well. All right. But I want to share with you is that recently I shared with you on this thing. Okay, I got it correct, but it doesn't anticipate what is happening on the stock market. Okay, so I mentioned this. Let me go through this. Can you see, right? So I mentioned this on the 4th of March. 4th of March. Can you see 4th of March? Now it's 11th of March already. So for those who don't know, I cannot edit a Twitter, unless I delete the post. So Twitter is something like this. I cannot edit anything. It's a timestamp I can edit. So I posted on the 4th of March. I said that TLT Treasury bonds, my potential star reversal signal appear on the 28th. Okay, the previous was the 27th of October. A potential bond price reversal and rally will lead to a lower yield and ease selling pressure on stocks. This is something I got it wrong. Because of the saga on the banks. In fact, right now, the bonds is acting like a safe haven. In fact, bonds acting like a safe haven, the bond price increases, okay, and then the stock crash. Okay, so this is something I got it wrong. Initially, the narrative was because, okay, interest rate was causing the whole stock market to crash. So when the interest rate or the EU will fall, right, that will cause the stocks to go up because interest rate coming down, okay, and those are stocks, you will see the interest rate coming down and then the stock price will go up. So, all right. So can you see that ever since I posted on this date over here, this early March, right? In fact, the bond price just shot up. The bond price just shot up. And by the way, I do have a TLT position. So in fact, you cover some of the losses on my swing long position. So that covers a bit, okay? That covers a bit. But the stock crashed. But the stock crashed. Well, that's the thing, okay? So again, but I want to share with you certain things is that something also a bit strange over here. All right. So is this VIX ratio over here, okay, VIX ratio. So VIX is the market internals that I look at, okay, so this is the VIX ratio over here, all right. So while the market is tanking, okay, the VIX ratio, it is still holding pretty well over here. It didn't really did a V-shaped recovery as I mentioned during the potential star reversal over here, okay. All right, potential star. I said many potential star reversal. Every time there's a star signal, it will come out, go out. So this time around, okay, it's still holding pretty well. So let me try to do a comparison over here. Okay, plus the let's do the XPY. Okay, can you see over here? While the S&P 500 it is coming down, the VIX over VIX ratio is still holding pretty well. So internally, it does tells me that is the market okay, just that you will scare a little bit more people and that kind of thing. All right, you understand what I'm trying to say? Okay, it's still holding on pretty well. In fact, you can see that generally it moves in tandem with the market. Okay, okay, let me try to show you this. Let's try to add SPY over here. New price scale. Can you see? VIX ratio up, down, up, down, up, down. So while the VIX is still holding pretty well, okay, the S&P is actually coming down. So there is a divergence over here. All right, and then what else? I want to show you the. Well, I lost my thoughts. I want to show you the what else? Okay, yeah, the market breadth, okay, yeah, forget, okay, market breadth, so market breadth, what is the market breadth telling you right now? So the S&P 500 right now, okay, the market breadth, percentage of stocks above the 50 days moving average, all right, so we are right now only about the 24% of the stock is above the 50 days moving average. That is for the S&P 500. Okay, if you look at the broader market, the MMFI, that is the percentage of stocks above the 50 days moving average, is also about the same. Okay, 34, so it's 34 is higher, 34% it is above the 50 days moving average. But there are certain things that I want you to take a look over here is certain sectors and industry. So the financial industry, okay, financial stock above the 50 days moving average. Can you see that it is actually near the low over here already? Okay, near the low over here already. Okay, this is like a overbought and oversold region. Okay, the highest number you can go it is 100%, right? All the stock is above the 50 days moving average. Or the lowest you can go is 0%. All the stocks are below the 50 days moving average. Okay. All right. Can you see that S&P financial stocks, financial SFFI above the 50 days moving average? It is at a rock bottom right now. Okay. Can you see whenever there's a rock bottom, price will just rebound. It's just a rubber band. When you snap too far away, you rebound back. Okay, when you snap too far away, rebound back. Okay, All right. Okay, so this is, can you see? Whenever it's near the low, it will rebound back. So will this be the case? Okay, it's like the last scare for the market and then rebound up. Okay, one thing also, this is a financial market. Okay, you can take a look. And then the what else? It is the utilities. I remove the Ichimoku and okay, so can you see utilities? Utilities is also at the rock bottoms right now. Utilities is also at a rock bottom. Only about 6% is above the moving average. Okay, all right. All right, so is there a possibility to bounce also? Later I'll tell you the seasonals. Okay, in fact, seasonals for utilities is beginning to favor us really for utilities. Okay, for utilities, and actually, in fact, for the consumer staple also somewhere near the bottom also. All right, you can take a look. Okay, this is the discretionary stock. This is the consumer staple near the low. Financial, this is energy. Okay, also near the low. Financial is at the low over here. This is healthcare is also near the low over here. Okay, the market breadth is actually at a low already. It's at a low already. Many sectors are showing low. Okay, industrial stock is the strongest among all the sectors, so it is still hovering about 50%. It's the strongest. Okay, tech, it is still pretty okay. All right. Yeah, materials also hovering near the low. Okay, real estate also hovering near the low. Telecom also hovering near the low. Okay, utilities is absolutely at rock bottom. So market breadth is suggesting that we are somewhere near the low, somewhere near the can the market go down? The market can go down some more, but we are somewhere near the low. So do you understand what I'm trying to say? Again, engage with me. Type market breadth. Just type B in the comments if you know what I'm going to share with you on the market breadth. Okay. All right. So Valerie is asking, yes, bonds are like fixed deposit. Basically, you get a yield, okay, a fixed yield. Like for example, it's like fixed deposit lah. So if you put a 10 years, you get a 3%. After 10 years, if you don't sell, you get a 3% return lah. Okay. All right. It's like IOU lah. IOU note. Yeah. Okay. Kevin is asking, how do I get the potential star reverse? This one is proprietary. I don't really share. Okay. Yeah, so sorry about that, Kevin. So market breadth is at a low over here. So let me go through the watch list that I have. So I covered a few things already, right? So I covered on the Vivix, market breadth, bonds, regional banks over here. Yeah, so these are things that I'm going to go through with you. Okay, so I'm going to share a view is that, the regional bank is actually KRE over here. For the regional banks, yeah. Okay, regional banks is showing a reversal star signal. I think I put, but somehow it just disappeared. Okay, a potential reversal star signal over here. Hey, where is it? Yeah, here. Okay, the last time it happened was, I think it's somewhere around here. Okay. So this is the regional bank. This is the regional bank which have a huge sell-off. Okay, based on my star signal, potential reversal star signal. Right now, it is showing a potential reversal star signal. Okay, and the previous time was in last July. So after that, it went up, and then will this happen again? I do not know. But okay, I might take a long in the KRE Regional Bank ETF. Again, this is a bit speculative. Okay, this is a bit speculative. Okay, because I'm buying in a downtrend. So please don't copy me. I can afford what I afford to lose because I have a huge buffer for the December and January profit. So I can still afford to lose a few long position. Can, but I might. So this is just my potential thing that I'm going to show you. Okay, can just type spec or not so that you all know this is speculative. So right now it is, previously it went down a lot, but right now it actually reversed back up again. So I might go for a long position at the end of the day. So I shall see first, not confirmed yet. So please don't copy me. I repeat, please don't copy me. Please don't copy me. Okay. I am entering purely based on the star reversal signal. It doesn't have a potential trigger entry for me. So this is very speculative. I repeat, please don't copy me. Can? All right. So so as I mentioned also, the market breadth, the banks, utilities are getting very oversold, and the market breadth is at a low level already. Okay. I also want to share with you the seasonals data over here. Okay, seasonals over here. So this one is, you all decide. Okay, you all decide. So I think the RSP, the equal weight, okay, SP 500, okay, equal weight, can represent the market better. So the ETF is actually RSP, okay. So from the 10th of March to the 27th of April, okay, for the past 17 years, all right, 94%, it closed positively higher, all right, which means that out of the 17 years, okay, 16 years it is positive. This is the S&P 500 weight, S&P equal weight RSP, okay, all right. So basically it's about time, okay, from now until the April. But generally, if you look at the stock chart, you look at stock charts, you look at stockcharts.com, you can put in RSP over here, RSP. You can go to the seasonals data over here. Okay, you put 5 years, 10 years, whatever it is lah. Okay, 10 years. Okay, 10 years good enough. Can you see that generally in April, okay, May, it is the most positively. Okay, all right. March is still okay, which means that, okay, March, in fact, it is still pretty choppy. As I mentioned before, seasonals data, the first half of March is generally not favorable for us. It's really, until the late March to mid-April, then it's favorable. So RSP, the best time to enter is actually, April. 90% of time it is positive. But based on the data that I have, okay, 10th of March to 24th of April, 90% chance it is positive. Okay, and then do you remember what I said about the utilities just now on the market breadth? All right, the XLU is the utility sectors. 13th of March to 18th of April. Okay, all right, for the past 16 years, 94% of the time it is positive, which means that out of the past 16 years, 15% of the time it is positive. Another one is consumer consumer staple, consumer defensive. Okay, 13 April to 18 April. 13 March, sorry, 13 March to 18 April, all right, for the past 16 years, all right, 94% of the time, it is positive, all right. Okay. GSL2, I thought you don't believe hammer. The KRE, this is not a hammer. Okay, you can say this is hammer lah, but this is a gap down and then post positively and go up a lot more. So technically speaking, this is not a hammer. Okay, all right, at least from what I see lah. Okay, but okay lah, I can call it a hammer lah, whatever it is lah. But this is a bit speculative, okay? Because gap down, and then with a lot of fear there, I think most people would not dare to buy this. Okay, yeah, all right. Jeffrey, what do you mean how many days? Okay, Can you be more specific with your question? I mean, how many days I will hold this, is it, or what? I don't have a definite answer. So I will see how the market move, then I decide. Okay, all right. Star signal also appearing for Hong Kong indices, KWEB, FXI. Let me take a look on the KWEB. Let me take a look. You give me a moment. KWEB, there isn't any star signal right now at the moment, so I can't really talk about the China market right now. Okay, so no, not yet for the Hong Kong market. Let me take a look again. FXI. Last week it has a star signal, but it doesn't really work out, so it breaks below the low. But it doesn't mean that it cannot go up higher again. So for FXI, the star signal was actually somewhere around here. The star signal was somewhere around here, but that price broke down lower. Okay. By the way, the star signal doesn't tell you the magnitude or how high it can go. Okay, so you can see that FXI, the star signal was here. Okay, it went up a little bit and then come back down again. So I repeat, the reversal star signal doesn't tell you how high it will go. It does not mean that it's a complete reversal. So you still need to watch the price action and see how you want to exit and how you want to take profit, etc. Okay. Darius has broken support trend line. Is that a concern? So Darius asking the ES, which trend line are you referring to? Are you referring to this trend line over here? Is it this one? Is it this one? Yeah. Of course, if you look at this, then it looks scary to you. So for me, I don't usually look at such trend line because it's too short term. So again, not my main technical tools to use trend line. But if you look at trend lines, then yeah, it doesn't look good. But as I mentioned, right, this is still holding a higher low, and higher low. So I think it is still okay unless price really break below this low over here. Then this is going to be a main cause of concern. So there are basically two support. One is this, and the other one is this. So right now I think it is still holding okay. There's a possibility that this could be a fake out and then price reverse back up again. And another thing that I want to share is that the market breadth is at a low already. So it doesn't make sense for me, to go short now. What I always call TMP lah, 头脑派 lah. If I wanted to short, I should have shorted near the start of February or near the mid of February over here lah. But right now the market is at a low already. Then I short, something is not right lah. So for now, I agree that the price action doesn't look bullish, but I'm more inclined to go long than to go short. You get what I'm trying to say? All right. If you get what I'm trying to say, just type TMP in the comments. Just type EMP in my 头脑派 if I go short now. Of course, it doesn't mean that price cannot just crash lah. Okay, it can, but to me is that the possibility that it rebound is higher than it continue to go down. Can you understand what I'm trying to say or not? So basically, I think right now the market breadth is favoring this. Okay, market breadth and the VVIX holding well. All right, okay. And of course, my star signal showing that the regional banks are doing okay. All right, and these are all doing okay. So as I mentioned, the reason why I'm still holding pretty okay is that February and March, I don't have a lot of long position, and those that I have long position one, in fact, I actually exited over here. It is just like this, some of the long position over here that I mentioned, it is this. Yeah, the PGTI, which I mentioned, okay, on the 4th of March, I actually exited somewhere around at this point in time, right? At this point in time, okay, it is actually at this point in time when the indices is here. When the indices is here. So yeah, there are a few long positions that I already exited. The two long position that I didn't exit, I get stop out lah. So bo bian lah. So be it lah. Okay, can? All right. So any other question before I call it a day? I hope you guys enjoy this session. You know, it's kind of last minute, as I mentioned. You know, I was down with a mouth food poisoning for the past 2 days. And then I just now I sent my daughter to a doctor. So it's a pretty last minute thing. Okay. All right. If you enjoy what I'm sharing today, just type value in the comments. Darius, before I, okay, Darius, you are saying that there's a shift to bonds as a safe haven. So, right, so you think this is still not likely to continue because of the price action? I think the bonds will still continue to go higher, the price. Okay, whether be it a safe haven or not, I think based on the star signal, it could continue to go high. And based on okay, a lot of things are based on my star signal. The star signal is saying that the yield is at a high level, it can come down. Okay, of course, if you ask me 1 month down the road, 3 months down the road, I cannot tell you a definite answer. Okay, like for example, this TLT. Okay, right now it is in very good profit for me. Okay, right now it's okay a long shadow over here lah. But again, this is a good profit for me lah. If you're talking about long, so if you ask me whether it can continue to go like that, I don't have the answer. Okay, but right now, as of now, it seems that the treasury bonds is acting like a safe haven. People are rushing to buy bonds. It seems like that lah. Okay, Ken. All right. So before I call this a day, just want to share with you again, right? So we have this Asia Trading Festival that's coming up in April. Okay. So this is the site that you want to go to. So pre-register now. We have new speakers and also also resident speakers, and you get to have exclusive bonus when you register for this event. So this bonus material is sent to you when it is nearer to the date, and you get this bonus material, okay, somewhere near the last week before the start of this Asia Trading Festival lah. Basically, yeah, we have a lot of speakers again. Yeah, so do register for this event and do subscribe to our Telegram channel, YouTube channel, and Twitter as well. So Twitter, as I mentioned, right, I share a lot of things here. Okay, do share, do subscribe, and do follow me as well. Let me post the link in the comments. All in all, okay, before I go off, I know there are a lot of bearish guys out there, or like a champion, like champions. Hey, I told you so that you should just short the market. Macro is not showing well. Let them be, okay, because you can short and you can long, you can still make money one. Okay, I prefer to go long. I didn't really go short, so it is okay. So I just wait on the sideline. So as of now, and in fact, as I mentioned already, I am looking to go long next week, or in fact tonight. We shall see whether I'm a champion or will I be the greatest fool next week or so. So we shall see. So I repeat, before I call it a day, I repeat, either I be the champion next week or I be the greatest fool next week. So we shall see. You can judge me next week again. All right. So thank you once again. TikTok can show or not? TikTok. Let me show TikTok. Okay. TikTok. Try TikTok. I don't really. I try TikTok. Okay. Where's my? I cannot find my TikTok link. I think cannot find my link. Over here. Okay. So I do have TikTok also lah. If you want to give me some love, okay. Follow me on TikTok as well. I post the link in the comments already. So I try to do multiple social media, but TikTok is really another level. Okay. I'm trying hard lah. I'm trying hard. To try to get engage more people on social media as well. So do follow me on TikTok as well. I really appreciate that. So I try to give some comments also. Okay. So with that, okay, Darius. will you follow 1.25 ATR to cut loss or wait till break below the level then cut loss? No, 1.25 ATR, I hit that, I'll cut loss already. Yes, I'm still following this. 1.25 ATR, I will just cut loss already. 1.25 ATR from my entry price. This has been my style for quite some time already. Okay, 1.25 ATR from my entry price. Okay, Ken, so give me some love. Subscribe to my social media channel, and I love you all. Okay, so yeah, I'll post the link in the comments once again. TikTok, hey, Alexio. All right, Ken. So with that, I shall end my session tonight. So I hope you guys find my sharing valuable. As I mentioned, just type value, you find it valuable. Okay, and next week, you shall know whether I'm the greatest fool or I'm the champion. Okay, thank you so much, and I'll see you guys again next week. Thank you. Bye-bye.